Every country in the world is in debt. That's right, every single one. There isn't a nation out there that isn't borrowing money from someone. The United States alone owes over $38 trillion, more than at any point in its history. Europe carries around $14 trillion, and Japan owes nearly $9 trillion. Even countries rich in natural resources like Saudi Arabia, or strong exporters like Germany and China, owe massive sums. So here's a question that might make your head spin. If everyone owes money, who is actually getting paid? It sounds simple, but it's far from it. Debt isn't just a weight, it's the invisible framework holding the modern world together. Every war, every financial crash, every boom and bust sits on top of this invisible scaffolding of borrowing. If you trace the chain of who lends money to whom, you'll notice something surprising. The world doesn't really owe money to a single person or country, it owes it to itself. But that doesn't mean everyone benefits equally. Most people never see the money. They just pay taxes, watch prices rise, and hope their pensions are safe. Meanwhile, the ones who own the debt, big banks, pension funds, and other investors, get the rewards. Right now, the total global debt is more than $315 trillion, almost 3 times the size of the global economy. To imagine that, picture the entire planet's economic activity, every store, factory, and service, and now imagine having 3 times that amount owed on paper. That's what the world is dealing with today. To understand how we got here, we need to go back in time. Long before credit cards, PayPal, or digital bank transfers, countries borrowed money to fight wars. In 1694, England was at war with France and running out of gold. The king had a problem. How do you pay soldiers when the treasury is empty? He turned to merchants. They lent the crown money in exchange for future interest payments, funded by taxes. To manage this system, the Bank of England was created. This was revolutionary. For the first time, the government could spend money it didn't yet have. And the lenders received something just as valuable. A promise from the government, something that could be traded, sold, or bought. This was the birth of government bonds, the foundation of our modern financial system. Other countries quickly copied England. France tried it, the Netherlands improved it, and the newly independent United States used it to fund its revolution and later westward expansion. National debt went from being a mark of failure to a measure of credibility. Being able to borrow money became a sign of power. Empires used to conquer land to get gold. Now they issue bonds to collect interest. The battlefield became the balance sheet, and over the centuries, debt became a global business, the invisible engine behind nations' power and influence. Today, the United States owes $38 trillion. Japan owes over $9 trillion. Every 100 days, the world adds roughly $1 trillion in new borrowing. Every country owes, every bank lends, and every citizen, through taxes, savings, and pensions, is both a debtor and a creditor. But who actually holds the other end of the rope? In the U.S., about half of the $38 trillion is held by investors. Banks, pension funds, insurance companies, mutual funds, and the Federal Reserve. The other half is foreign: Japan, China, the UK, and a few European countries. So when people say the US owes China billions, that's technically true, but it's only a tiny slice of the total debt. Most of it is owed to Americans themselves. It's a circle. The government issues bonds, banks and funds buy them. The Federal Reserve may buy them back, creating new money. Taxes pay the interest, which flows back into pensions and accounts. The debt is real, but the creditor is mostly a mirror of the same system. This cycle isn't just American, it's global. Japan lends to the US through treasury bonds. The US lends to Europe through the IMF. Europe lends to developing nations through the World Bank. Developing nations, in turn, lend back to wealthy countries by holding foreign reserves and Western bonds. It's like a planet-wide game of hot potato. But the potato is made of promises. Every country holds someone else's IOU. Every promise is backed by another promise. To make it even simpler, imagine you lend $100 to a friend, then your friend lends $100 to another friend, and so on. Eventually, the money is moving in circles, and everyone's success depends on everyone else's trust. That's exactly what happens on a global scale, but with trillions of dollars instead of $100. And behind it all are the markets. Hedge funds, pension funds, sovereign wealth funds, and central banks control tens of trillions in assets. They decide which countries can borrow cheaply and which must pay more. When they lose confidence, currencies collapse, governments fall, and entire economies can be reshaped in days. Democracy chooses who leads, but markets decide who survives. Central banks are the ultimate players. They don't just manage debt, they create it. When the Federal Reserve or the European Central Bank buys government bonds, new money enters circulation. One country's debt becomes another country's asset. Every dollar, every coin, every digital dollar carries an invisible IOU. Debt-free money doesn't exist. And here's the kicker. Governments don't actually plan to fully pay off their debts. Instead, they roll it over, issuing new bonds to pay old ones. Interest becomes the main product, the rent for stability. The global economy now runs on that interest, like a shark that must keep swimming to survive. For decades, this system has worked because people believe in it. Investors trust governments will pay interest, even if they never see the full principle. But when confidence falters, chaos follows. Greece in 2010, Argentina, and Sri Lanka have all shown this. When the system breaks, the creditors, IMF, rating agencies, big investors, suddenly appear. Debt isn't evil, and creditors aren't villains. Debtors aren't victims. They are two sides of the same engine. But when the engine runs out of fuel, the question, who is owed, becomes personal. At the top of this global pyramid, there's no single villain. It's everyone, including us. Debt today is money itself. Governments issue it, banks multiply it, investors trade it, and citizens rely on it. Once, debt meant bondage. Today it means balance. But if that balance ever tips, confidence breaks, and the illusion ends, we'll see what debt really is. A promise that can't last forever. Think about it this way. Debt is like the threads in a giant spider web. Each country, bank, or investor is a point where threads connect. Pull on one corner, and vibrations are felt across the entire web. The system only works because everyone believes the web won't snap. Once the belief fades, everything collapses almost instantly. Even on a smaller human level, debt works the same way. Households take loans to buy homes or cars. They pay interest, sometimes rolling one loan into another. When one family struggles to pay, the bank might restructure the loan, much like countries restructure debts. The difference is scale. The global system takes this household logic and applies it to trillions of dollars, connecting billions of people through invisible promises. Debt is not just numbers on a balance sheet, it's the heartbeat of the global economy. Governments, banks, and citizens all depend on it. Interest payments flow upward from taxpayers and workers to wealthy investors and institutions. That's why global debt and inequality rise together. The system rewards those who own debt and makes life harder for those who merely pay it. Yet the system is fragile. Confidence keeps it alive. When belief falters, chaos follows. Markets spike, interest rates soar, and entire economies can collapse. But when people trust the system, debt keeps rolling, money keeps flowing, and the world keeps spinning. Debt is no longer just money owed. It is trust, power, and stability. It connects everyone in a massive, invisible web, shaping the lives of billions. Understanding it helps us see how deeply intertwined we are in the modern financial system, whether we like it or not. Here's one more way to think about it. Debt is like a giant clock. Every interest payment is a tick. Every bond issuance is a gear moving. If one gear stops turning, the whole clock starts to malfunction. That's why governments, banks, and central banks constantly keep issuing, refinancing, and rolling over debt. The clock must never stop. Otherwise, time itself in the economy comes to a halt. Even more simply, imagine a game of musical chairs with trillions of dollars. Each chair represents money available. Every player is a country, bank, or investor. As long as everyone keeps moving and the music plays, no one falls. But if the music stops, if confidence fades, chaos erupts, people scramble, and the system collapses. That's how fragile and connected global debt really is. Debt is the engine, the glue, and the heartbeat of our modern world. It's invisible, complicated, and often misunderstood, but it is the most powerful force shaping economies, governments, and everyday life. And the next time someone asks, "Who does the world owe?" you can answer, "It owes it to itself." But remember, not everyone benefits equally. Some win, some lose, and most of us just keep spinning along in this vast, invisible web of promises.